Hello, ladies and gentlemen. This is Greg Michaelowski. I'm with FXDD, and I'm doing a Forex commentary for FXStreet for Wednesday, July 14th. Yesterday, if you listened to my commentary, it was Tuesday, it was moving day. Wednesday was test day today. So let's go into some of our charts, and I'll show you exactly what I mean. I'll start off by taking a look at the euro versus US dollar. This is a daily chart, and I go back to the high of 2010. This high occurred on January 13th, 145.79, and the market has been trending down for most of the trading year here in the euro versus US dollar. We had a few little corrections along the way, and this last correction actually took the price up. And where do we test? We tested this top side of this trend line. I'm going to zoom in here. I'm going to show you that level. That level came in at around the 127.79 level here today. Now you also see this 50% retracement line here as well. And where does that come from? That comes from the April high here. This April high was the gap moved to the higher high after weekend Greek announcement, and then the trend to the downside. So the April high down to the low, 50% retracement came in at 127.84. So not only do we have this trend line at the 79 level, we had the 50% retracement at 87.84, and what was the high for the day? 127.77. So that's a successful test of both the two important key levels here on the daily chart, and since that time we have seen the market start to move down. So that was a key test for the euro versus US dollar. Let's go to the sterling versus US dollar. I'm going to start off by taking a look at the hourly chart, and what we can see here on the hourly chart is that the market started to move higher, and we tested this old trend line. This trend line went all the way back to the June 8th, I believe, June 8th. We tested the line here on this day right here. The market came down, tested that line, moved up a little bit, and fell below. This failure was actually a bullish sign. The market failed to correct further, failed to find the momentum to the downside, and the sharp move to the upside ensued for the sterling versus US dollar. So it kept the integrity of this line. We also kept the integrity of the top parallel channel line here for the sterling versus US dollar. Now last week the market broke below this line after testing it one last time on July 8th, and this break to the downside led to the sharp correction to the downside, which took the market all the way down to around the 149.50 level. Now over the last 3 days we've seen the market rebound sharply, and today we've tested and moved back above this trend line here. We tried it here, failed, and we made it up to this level, and we stopped at around the 152.90 level, and currently the price is trading around that trend line once again around the 152.48 level. Market's trading 152.53. Now I do have a horizontal line here coming in at 152.90. Not only does does it signify that we had a double top here, we did reach a high of 95 on this bar, 90 on this bar here, so a failure up there at the 90 level. But what I want to do is I want to go back in time, and I show you the last time the market traded to this level by looking at the hourly chart. I'm going to look at the hourly chart. I'm going to look at this 152.90 level. Now before I go and look at this particular chart, I want to go to the daily chart, and here's the I'm going to put a line in here at the 152.90 level, and what you can see here looking at the daily chart is some support and resistance at this line right here at the 90 level, around the 90 level, but you don't see the details of it. And sometimes traders, especially when the market hasn't been around a key level for a extended period of time, like to go back and take a look at like an hourly chart at what was happening when the market was last at 152.90. And if you go back to April 1st of 2010, you can see that the market had some resistance against this 90 area here. Market came up, tested it, market came up, tested it, market failed, and then moved through this level and skirted to the upside. The next time the market came down to the level, we consolidated at this level and then fell to the downside. When the market moved back up to the upside, we came down and used that 90 level as a support level. We moved up higher, and we came down again. Where did we come down to? We came down to test the 90 level. When we broke through the 90 level here, we used that level as resistance and then moved down here. Where did we come up to? The 90 level. level. Where did we come up to? We came up, tested 90 level, and then we broke through the 90 level and moved higher. The final test of the 90 level came when the market fell down here, retraced up, came to a high of 81, and then fell from the 90 level to the downside here, and that started the move to the downside. So now we are fast forward to today, and we're at that level once again. And so the market, I feel that smart traders out there will go back in time and they'll look at those levels and they'll find those key levels that existed back then, those key levels that forced the market up or down at that time and provided a level of either support or resistance, and I call those lines remembered lines, and I believe that the market remembered that line here today, and the market found its resistance around that 90 level. We hit a high of 95, and we continue to see the sellers and force the market back down to the downside. So that was a test number 2 here today, and that level will continue to be now added resistance on the top side, and I wouldn't be surprised if the market should break this trend line again, that we see further selling pressure, get back below the 152.27 level, and perhaps even move down toward our 100 and 200 bar moving average on the hourly chart. So that was test number 3 is taking a look at the dollar versus Canada chart, and if you look at the 100-day moving average, this is the blue line in the chart, and this is a simple moving average of that 100-day moving average. Of the simple moving average from the chart. What you can see here is over the last 4 days, the market has tested this 100-day moving average, and today was no exception. Yesterday we dipped below that level, making a low of 102.75. Today we dipped below that level, going to 102.85. The 100-day moving average is 102.94, but you can see that the market has moved back higher off of that level. Looking at the 5-minute chart here, here's our 94 level, tested the level, came up, tested the level, moved below the level, could not keep the momentum to the downside, forces the market back up to the upside. That's our third test of the day. It's another test for Test Wednesday. The fourth test today occurred in the Aussie versus US dollar, and again this is on the daily chart, and again this is a 100-day moving average. I'm going to zoom in here at that point right here. That's the blue line in the chart. The 100-day moving average comes in at 88.79. The high rate's 88.70, and the market has since sold off, currently trading at 88.10. A successful test of the 100-day moving average. In addition to that, it also represented the 61.8% retracement of this move down from the April high to the May low, 61.8%, 88.83. The high for the day, 88.70. The 100-day moving average, 88.79. Successful test number 4. The fifth test of the day occurred in the New Zealand versus US dollar, and you can see this currency pair has been seeing higher prices here over the last month, really, going back to the beginning of July. Market's been zooming to the upside. Today we came up and tested this trend line. This trend line came in at the 72.36 level. The high reached all the way up to we went up to a high of 72.52, but the market has since come off and is trading back below that level at the 36 level. The question tonight is, where will we be able to stay below the 72.36 level and move into the hourly chart here? The next question that we're going to have to see is if we are able to get below this 72.02 level. This is the old highs here that we saw in the New Zealand versus US dollar. So we have two tests here, one of the 72.36, and on a shorter term chart, the test of the 72.02 level. Move that back. 72.02 level on the downside, which corresponds to these high levels right here. We're going to have to either get below, if we stay below the 36, we're going to have to get below the 02 level, and then we may see a test of this key trend line in the New Zealand versus US dollar, which has controlled the trend, or the trend line that comes up from the July 7th low all the way up here to the current level, which comes in around the 71.46 level. So if yesterday was moving day, today is the test day. and we'll see what tomorrow has to bring. But it does seem like the market did test some key resistance or support levels in a lot of the different currency pairs. And when that happens on the same day, it's all the sun, moon, and stars are lit aligned, and perhaps you could expect to see corrective moves of the trends that we've seen in these currency pairs all occurring at the same time. This is Greg Michalowski with a look at Test Wednesday, the test day.